think there are a couple of reasons as to why the market is responding favorably at the beginning of this week. It declined 4% and then retested that low level on May 19th. But because it did not close below the prior week's low, technicians believe that we had a successful retest of that decline. So that's the first thing. Second, I think, is that we've been seeing interest rates come down a bit because the possibility is that a big infrastructure spending package will not make its way through Congress. And as a result, there's less worry about it pushing up interest rates and inflation any further. So also then with interest rates coming down, that implies that growth stocks, the consumer discretionary, communication services, and technology issues can look better because of the intrinsic value calculations with the lower interest rates. So a lot of these factors, I think, have caused the markets to work their way higher. Yes, May tends to be weak following a very strong year-to-date rise from December through April. But we also tend to fluctuate in June, July, and into September. So the sell in May is more than one single month. Yeah, so I think that the sell in May really just implies that the price performance from May through October is relatively weak. It's about 1/4 the average gain that we see typically in the November through April period. It doesn't necessarily mean, however, that you really want to sell. It simply indicates that the return is usually quite a bit weaker. And if you wanted to do anything, you are better off rotating into the more defensive sectors. In fact, going back to 1990, the top 10 year-to-date returns through April then saw the market up only 0.8% through the end of October, whereas the healthcare and consumer staples groups were up an average of 3.5%, and the strategy beat the market 70% of the time. I think that the cryptocurrency, at least right now, is a reflection of investors' willingness to speculate. And you could also say loosely tied to that are the shares of Tesla. So with the cryptocurrency fluctuating down sharply last week, but then up again, I think that that has helped investor confidence. So yes, cryptocurrencies could be the canary in the coal mine. If they drop much further, then I think that could unnerve investors and cause the market to go with it. I think that with more people getting vaccinated, that they are going to be more willing to emerge from their households where they have been locked up for about a year and a third. So investors very much have cabin fever and are very willing to get outside and to stretch their legs. I think what is also implied by this is because the U.S. is doing so well in terms of vaccinations, yet the rest of the world still has some challenges, Japan in particular, that maybe investors are more willing to put their money to work here in the U.S. than start to spread it around the globe just yet. So near term, maybe the number of vaccinations has been able to help equity prices here in the U.S. Well, the cyclical stocks, the tech stocks or growth stocks, if you want to call them that, do have price to earnings ratios that are higher than the value components. And so I think that while there could be short-term fluctuations and rotations back and forth between growth and value, that value probably has more upside potential because first off, the growth expectations, earnings growth for 2021 is expected to be more than 30%, whereas for growth stocks, the earnings are likely to increase by about 22%. And when you also have lower growth, but you have higher PE ratios, then I think both of those factors could end up causing the growth stocks not to do as well as the value stocks. And then add in there the potential for an infrastructure spending package, even though likely to be smaller than what the president initially wanted. I think that gives additional reason why value stocks could continue to do well through the end of 2021.